Supply chain finance is expected to grow between 10 and 25% globally in the next few years, but for many banks and corporates, these types of services still present challenges. At the International Chamber of Commerce Supply Chain Financing Conference in Paris last week, experts discussed the obstacles standing in the way of the sector's development. According to them, the perception that supply chain finance is too complicated is holding banks back from developing a clear strategy as to how to implement it, which has resulted in a lack of awareness of these types of services among corporates.
They don't maybe not see a need because they haven't seen the impact it can have on the open account tradings. And that is still for the banks to position.
Speakers pointed to the need for small, local banks to get involved in supply chain finance and suggested they use third-party software providers or join forces with bigger banks in order to limit initial infrastructure costs.
Use the infrastructure, the experience and the knowledge that the larger banks have to be able to provide the service to their client.
And the sooner they come on board, we will have the critical mass, the threshold that will allow BPO to take off.
In particular, the bank's payment obligation, or BPO, was presented as an option to be included in banks' trade finance portfolio without requiring extra investment in infrastructure.
We enable the banks to upgrade their software solutions to that additional instrument. There is no need to invest in a separate software solution. Today we already have 41 banks, banking groups, I would say, confirming their adoption of the BPO. And out of that, about 15 are local banks.
To corporates that questioned the financial efficiency of the BPO, experts replied that it would reduce costs for banks, which would then reflect that benefit on buyers and suppliers.
There are three elements of cost. There is a credit risk, liquidity risk and operational risk. In a BPO, the operational risk element goes to zero, or at least gets reduced a lot. And consequently, the banks would be passing on those benefits to the clients.
However, delegates and speakers agreed on the necessity for the BPO to have a clear set of rules adopted by the ICC before it can be rolled out on a wider scale.
The fact that ICC has still not fully blessed the rules for BPO is an issue, because that's a question that corporates keep asking.
We have to make sure that the full consensus-based building exercise is done by the right time, but we are working hard on it now. We are producing draft 2 of the BPO rules, and we really expect everything to be on track and to be adopted, as I said, in the spring 2013.